Welcome back to the Clara CFO Group channel. My name is Hannah Smolinski, and we have been talking about some financial statements and explaining some of the basic financial statements in videos. And today we're going to talk about the profit and loss, also known as the income statement, also known as the statement of earnings, also known as a couple other things if you are in other countries as well. But this is basically the statement that shows us how much profit we have at the end of the day. So we really like this one. And this is where a lot of our work ends up revolving around. This gives us a lot of information every single month, and we love the income statement. If we're gonna understand one financial statement, in and out, this is the one that you want to know. I also recommend knowing the balance sheet in and out because they absolutely work together, but I want you guys to make sure you are really, really clear on what shows up on an income statement. All right. So if that sounds good, stay tuned. If you aren't already subscribed to the channel, I would love to invite you to subscribe to the channel. We'd love to have you here. And hopefully this video is helpful. And if it is, could you give it a thumbs up, because that also helps this video do well in this platform, and more people can see it and more people can know about their income statement and their profit and loss. Okay, so let's go ahead and dive in, and we are going to look at a screen share, and I'm going to show you guys a real P&L. This is from a real company. The identifiable information has been scrubbed out of it, so you guys don't know who it is. No judging on their profit or anything like that, although they're doing quite well. But the point is that we want to see real numbers in here, and I can show you exactly the types of things you're going to see in an income statement. And just super high level, an income statement is a report that you run for a period of time. Unlike the balance sheet, which if you want to check out the balance sheet one, we'll make sure we link it up here and at the end and all the things so you can make sure you get that and if you haven't seen it yet. A balance sheet is run at a point in time, and an income statement is run for a period of time. And what I say is we need to know what we have earned and what we've spent over a period of time. And that's what the profit and loss shows us. And when I say earned and spent, I mean revenue and expenses, okay? And then revenue minus expenses equals profit. And that's what is going to show up on our income statement here. We're running it for a period of time. What else do you guys need to know before we get into it? I think that's about it. So let's go ahead and go into our screen share. So here we are in the example company profit and loss, and I want to just kind of break down the structure of the statement for you first, because structure is important. It will always be in this order, and this helps you if you're trying to figure out a number and you need to figure out where to look for it. This will help you guide that if you understand the basic structure. So first of all, income, revenue, sales, top line, all of that is synonymous. It all will be at the very top. So this is our income. It will always be the first thing on the P&L, okay? The next thing after income will always be cost of sales or cost of goods sold. Now, some businesses might not even have this cost of goods sold section. They probably have some cost of goods sold, but maybe they don't have it like specifically itemized out, which maybe they should. But there should always, cost of goods sold would go next, because then you have this calculation called gross profit. And that's income minus cost of goods sold equals gross profit. Then you'll get into your expenses. Now, this is where it gets the wild, wild west out here. This is where people will do whatever the heck they want in this order. We have a way that we like to present our information and order it on the P&L, but you will see loads of different ways that people are going to show their expenses. In really big companies, you'll also have sometimes things broken out by selling versus like administrative costs. You might have it broken out like into SG&A versus operating. You're going to have different breakouts. So if you go and you look at like a public company and you look at their P&L, their expense section could be named a couple different things. But for small businesses and the ones that we're looking at, expenses are usually all lumped together. They're either like cost of goods sold, so they're above that gross profit line, or they're going to be in general expense lines. This is separated out pretty similar to how we typically do ours with numbering and everything. So we'll talk through that. But then after expenses, this is where you have your income or your net income, which is also equals profit. Now, sometimes there'll be another little section underneath this operating expenses area, which I would call all of this operating expenses here. Sometimes you'll have another section, this is all operating expenses. Sometimes you'll have another section down here called other income and expense. A lot of you might have used other income and expense during PPP and EIDL grant times because it was advised that that income goes down there because then it's really clearly identifiable and potentially and not taxable. Like for PPP loans, when they were forgiven, they went down in that other income line item. You'll see this structure across the board. Okay. So what is on a profit and loss is the next thing. What is on the profit and loss is what you have earned during this period of time, what the business has earned. And like we're looking at this period of time is January through December of 2022. So we're looking at a full year. So this is what the business has earned up here in the expense side. And then this is what the business has spent. Okay. They've spent money on cost of goods sold and they've spent on payroll expenses. This is all the operating stuff, payroll expenses, banking charges, sales and marketing, professional development, website, professional services, office expenses, software, travel, meals, all these things. That is earned and spent. And the leftover and the remainder is profit. Now, the really confusing thing about a profit and loss statement sometimes is people think if I've written a check for it, then I've spent the money. If I've written a check for it or I've paid something, then I've spent the money and it should show up on the profit and loss. But there are a lot of caveats to that spending, okay? For example, if you have paid debt is actually a balance sheet transaction. Debt is paying down, let's say a payment was made on EIDL. That is lowering your cash because you're taking out cash, and then it's lowering your debt. So actually, even though you've paid out that cash, it doesn't show up on your P&L anywhere. Similarly, if you pay your business owner a shareholder's distribution, and that you would think might show up on your P&L, but that also doesn't show up on your P&L. That is also a balance sheet transaction because it's technically should show up in this equity line, owner's pay, and then it comes out of a checking account and goes into the owner's pay situation or account. So there are some times where you might be thinking, wow, I spent money, but I don't see it on the P&L. And that would be a really good thing for you to be clear on. When are we spending money? Is it actually going to be on the P&L or is it going to be on the balance sheet? Now, this is really important at the end of the year. I did this, a client was like, oh, Hannah, I paid off my credit card before the end of the year because I thought that would help with taxes. But actually it doesn't because it just lowers the liability on the balance sheet. The expense has already been spent from the transactions that happened on the credit card. So, be really clear on, what actually shows up on the profit and loss statement. And if you need to ask exactly for your business situation, ask your bookkeeper, ask your CPA. If I do this, is it going to be on the profit and loss or is it going to be on the balance sheet? Watch these videos, get really comfortable with what's what, but also feel free to ask your professional if you aren't sure. So the profit and loss is really pretty basic. What you earned, what you spent, and then what's remainder? What is your profit at the end of the day? What you're not going to see here is if you invested some money, let's say you moved $20,000 from your cash account into, some investment funds, that's going to be on the balance sheet. Again, it's not going to be here because you didn't spend it. You just moved some assets from one place to another. And then you can just kind of think about this. Does it make sense? Did I actually spend it or was it just a balance sheet transaction? Okay, a couple other things to know about the income statement is that it resets every year. You start building it at the beginning of your fiscal year. You basically start at 0 in all your accounts and then they start building up again. And every month it starts at 0 and it builds up again. So you'll build your income statements every single month and they will all accumulate together to be your full year-end financials. But unlike the balance sheet, never resets. It always is rolling forward, okay? So that's another thing I want you guys to know. That's about it. I think that gives you a pretty good high-level overview of what the income statement is, what a profit and loss is. And if you have any other questions about the profit and loss, please give me some comments and questions in the comment section below. I'd be happy to answer those either with another video, more of a deep dive, or maybe I can just answer them directly in the comments. So thank you guys, and make sure you check out the other video about the balance sheet, and I will talk to you guys later. Bye.